Hello everyone, welcome to BISP Solutions. In today's session, we'll be focusing on pricing, then OTC cycle, then how can we configure the sales tax and then sales receipt or cash sales. Okay, so let's start with the pricing. Let's go to the application. So first of all, what is pricing? So pricing is the process whereby a business sets the price at which it will sell its product and services. Okay, so for creating pricing, hover to the list, price level list. Click on new here. Now here you can create your own pricing list. So you have to give the pricing name. Before that I am showing you that price level type. After that we have to select the price level type. So here there are two type of price level, that is per item wise and fixed percentage wise. Okay, so per item wise means if I am selecting this option, so here you can see I am getting an item list which is available in my QuickBooks application, and here are the cost of purchase, and here is the standard price of selling, and here I can mention the customized price if I am selecting per item wise. Right now I am selecting percentage, fixed percentage. Okay, so here I am giving name to it, that is pricing underscore fixed. Now the price will increase. Okay, and item price by so here I am giving 10%. Now click on OK. So here I have created pricing list. Okay, I will show you that how can we use this. Before that, the next thing is OTC cycle. So what is OTC cycle? So in OTC cycle, it starts from receiving an order from the customer and it ends on when customer make the payment to us and we record the payment. Okay, so in OTC cycle, the first step is to receive the order from the customer. After receiving the order, we fulfill the order. Fulfill means that we look into our inventory, that whether inventory is available. After that, we ship the order to the customer place, and then we create the invoice, and on the basis of invoice, customer make payment to us, and then we record the payment. Okay, so let's create an sales order. Okay, so select the customer. So here is the today's date, address and sales order number. Alright, now the next thing is to select the item. If you want to mention the description, so you can mention the description here. Then order. So here I am selecting 2. Now here you can see this is the basic standard price, that is $1,000, but right now I have created this pricing fixed. So if I want to select the customized price for this customer, so in that case I can select this. Okay, so this is the role of this pricing. So like this you can create so many pricing levels. Okay, so right now I'm selecting this pricing fixed, and here you can see amount is accordingly, amount will get changed here. Okay, now let's save this. Okay, now here you can see this is the Albert, as I have selected this customer name. So in the right side, right hand side, you can see that these are the recent transactions, that is, this is the opening value. Now here is the sales order which is created by just now. Okay, so let's click on it. Okay, not click, just a moment. So after creating the sales order, the next step is that I am creating an invoice. So first to select the customer name here, that is Albert. Okay, so here is the SO which we have created, so it is showing us the detail. Create invoice for selected item or for all sales orders. So here I am selecting for the selected items. So we have ordered, we have received this order. On hand quantity is 5 and ordered is 2. Alright, now let's click on OK. So accordingly information has filled in our invoice. So here you can see item name iPhone underscore 14, then order 2 quantity and rate $1100 and amount is $2200. Alright, so we have filled such information. Let's save this data. Now here let's open this one. So here you can see GL impact of this transaction. So what is the journal entry for this? So here you can see the, for SO there is no GL impact, so there is no entry, but at the time of fulfillment what would be the entry? So here it is COGS account debit to inventory, because we are selling the item, so inventory is crediting here. And at the time of invoice, here we are booking our sales, so sales account credited and accounts receivable debit. Okay, so now let's view the GL impact of it. So here you can see at the time of fulfillment, here there is 2 entries, that is COGS account debit 1710. This is the COGS, cost of goods sold. Okay, so COGS account debited and inventory asset credited by rupees 1710. This is COGS value. Whereas at the time of invoice, here you can see accounts receivable debited and revenue account credited. Okay, so here is the entry GL impact of this transaction. Okay, now let's click on it. Now we can receive the payment. So receive payment option is there. Okay, so receive from Albert, payment amount $2200, date is today's date, and here I'm paying this one 2200 amount. Okay, so let's click on save and new. So we made the payment. Now the next thing is, okay, so OTC cycle we have completed, as we have received the order, then we created an invoice. It includes fulfillment of order and shipment, then we receive the payment and we record the payment also. Okay, now after this let's configure the sales tax. For configuring sales tax, first set the preferences. We have to activate the option of sales tax. So here it is, sales tax, then under company preference, just do you charge sales tax? So here just click on yes. After that you have to add the sales tax item here. So from here you have to select the type as sales tax item, and here you have to give the sales tax name. So here I'm giving name as sales tax. Okay, now here you have to mention the name. So our company Global Incorporation is eligible for 7% rate of tax. So here I'm creating this sales tax rate for 7%, and here we need to select the tax agency, that is vendor that you collect for. So here I'm selecting Department of Revenue. Okay, then click on OK, and here when you pay the sales tax, so here I'm selecting this quarterly, and here as of the invoice date on the accrual basis, and then OK. Just a moment. Now let's create an invoice. So here I'll be showing you the cash receipt. How can we enter the cash receipt? At there I'll be showing you the tax also. So create sales receipts. Okay, so here I'm selecting customer name as Bobby, then select an item. So I'm selecting this iPhone 14. Then here you can see as I have configured the tax, so here now tax column is appearing. Then mention the quantity here. So here I'm giving one quantity. Then rate, here I'm giving 1000 and amount 1000. Okay, accordingly sales tax has been calculated at the rate of 7% on this value, that is $70. Okay, now just save this. Save and new. Just a second, the transaction is loading. Okay, sales receipt, customer name is Bobby. Let's double click on it. Okay, now see the transaction journal. Now here you can see see again COGS account debited to inventory asset credited because we sold the goods. Alright, then we booked the revenue here at the time of invoice, so revenue account credited, and we received the funds, so it is debited on undeposited funds here 1070. This is revenue we have booked for rupees $1000 and sales tax credited by by $70, so overall $1070, so it is debited here $1070. Okay, so this is the real impact of this transaction. Now the next thing is that how can we record the deposits, advance payment from the customer. For that, let's go to the record deposit section here. Now deposit to bank, select the bank name here. Just a moment. Now receive from, here you have to mention the name of your customer. So here I'm selecting the third one, Charles. Then select the account, from account receivable. Now you can mention the memo here, that is advance received from customer. Then payment method, whether it is cash, check. So here I'm selecting cash. Now enter the amount here. So here I'm entering amount $100. Okay, now after that let's click on save and new. Okay, now let's go to the report section. So here is the journal impact of such advance received from the customer. So here you can see we have received the amount in bank. So bank account debited and account receivable, it is credited, as we have received the advance from this customer Charles. Alright, Charlie. Then I don't want to memorize this. Okay, now after this we are having other impact to see. Account receivable. So here you can see we have created an invoice. So for that you can see Albert account receivable. When we have created this invoice, at that time you can see revenue we have booked for rupees 2200. So at that time it is debited, account receivable account debited, and when we got the payment from our customer, in that case account receivable account get credited. So ultimately it is having the nil impact on it. Alright, 2200 and 2200, and here it is advance received from the customer. So either you can adjust the advance received from any future bills, future invoices. Okay, so here impact of account receivable is nil. Then revenue, okay, so revenue account you can see when we sold goods to the Albert, at that time revenue account credited by rupees $2200. Okay, and when we book the cash sales, in that case it is credited, we booked revenue by rupees $1000. After that COGS account. So here you can see for the first invoice which we have created for Albert, in that case 1710 amount for COGS account debited. Okay, and at the time of second there is sales receipt, in that case 855 account debited. This is COGS account debited. And then inventory, let's see the impact on inventory asset, credited. Okay, so here you can see inventory account credited at the time of Albert. At the time of invoice it is credited by $1710, and at the time of cash sales, when we made cash sale to Bobby, at that time it is credited by $855. So this is the impact of all this. And one more thing, that is undeposited funds, as we have received amount rupees 2200. In case of Albert, $2200. Okay, so here it is debited, and at the time of cash receipt we have received amount from Bobby, advance receipt, that is $1070. Okay, so this is the impact of all the transaction on our trial balance. In the same way, you can view the transaction impact of these transactions on various reports such as trial balance, then general ledger, then profit and loss and balance sheet and all such reports. Alright, okay, so yeah, this is all about today. So we have completed AR portion, accounts receivable. If you have any queries, reach out to us. Okay, that's all for today. Thank you.